What is going on, investors? Hopefully you guys are doing well out there. Time to go to outer space today. We're going to talk about Virgin Galactic Holdings Company, ticker symbol SPCE. Year to date, this stock is up massively, up 94% just this year. $10 billion market cap. The stock's been even higher this year, up in the almost the $60 range. It's about $20 more than where the shares are today. Now, when we get over to the financials, we won't see a lot of revenue on this one, and we definitely won't see profit. That means, in my opinion, this is more of a press release company because they gained earlier this month. This just gives you an example of holding Virgin Galactic shares. They gain on speculation of a launch this weekend on February 18th. Later that day, the shares drop because the company said that speculation is not true, and they continue to fall. Now, they had a nice little run up when Cathie kind of registered a kind of space ETF, and investors, I think, properly are assuming that that ETF is going to have to buy up shares of Virgin Galactic. And when we get over to the financials, spoiler alert, they're going to have plenty to sell ARK ETF if they want to. Virgin Galactic sheds another 5% in the after hours after they pushed that rumored test flight out to May. And so if you're holding this stock, you're going to have to stomach this type of turbulence because this stock is in its infancy in terms of its product and its offerings to investors. We see here for the revenue side in December of this quarter, this is last quarter, so they're giving you quarter over quarter, and then they're giving you year over year. You see quarter over quarter, we've had no revenue. This is for the full year here at the end of the year. This is the end of last year. You see very, very minimal amounts of revenue. Now, so what you want to focus on when the company has no revenue, I don't think you want to dip into all the press releases and read them and fall in love with the story. I think you want to fall in love with the cost structure and see how well this company is managing the cost, because that is going to be key for this company to eventually attract more and more investors. It does have a $10 billion valuation, so you want to factor that in. We see here operating loss last quarter was at $77 million. Didn't improve that much, but improved slightly to $74 million. You see last year, it was at $73 million. It appears that this company is kind of running on that $77 to $75 million kind of run rate on an operating loss perspective. So we've got some other, interest income, but basically that's what the company's losing on a month-to-month basis. For the full year, they lost $275 million operating the business, which again doesn't really bring in any significant revenue. The other thing that they're doing is they're issuing lots and lots of shares. You see, just over the last quarter, they issued about 11 million more shares of the company, and you better believe they're probably going to continue to do that because we factor in that they lost 273 million. That's probably not all cash. When we get over to cash flows, we'll take a look at that. But you notice here on the balance sheet, we have $665 million. That is not a lot for a company that's not likely to bring in any significant revenue for the foreseeable future. But they don't have a lot on the liability side, and so that does help them because they can finance this by issuing shares of the company or by issuing other types of forms of debt, convertible notes, or just traditional bank loan debt. We'll see what they end up doing. Now, cash flows is really important with this company because we do have some things like stock-based compensation, not necessarily cash. As long as employees of Space and Virgin Galactic Holdings are willing to work for shares of the company, then they can compensate the employees there instead of burning through even more cash that is relatively in short supply, at least on the balance sheet at the current time. So we see here for the quarter, they burned through about $70 million. Again, that's what they almost lost on the net loss basis. We see in the last quarter, it was a little bit better. Net loss was 76, but they only burned through about $54 million worth of cash. Over the last year, they burned through $233 million worth of cash. And again, I pointed out that they have about $600 million. So they're on pace over the next year to burn through roughly half of their cash. And that's assuming that they don't lose even more money trying to launch these, do these test flights and do all this R&D that they're going to have to do. My guess is they might even have to spend even more money than they did in this last year. That means more fundraising likely to come. You see here, they did a lot of fundraising, cash flows from financing activities, in this case, kind of fundraising. You've got proceeds from issuance of the stock options. So you have that here. Proceeds from issuance of common stock. You see that here and here, just gigantic raises of money through the equity market. So as long as investors have an appetite for this stock, they're going to be able to buy, sell shares into the market to fund this company. But if investors lose interest in this company, it's a company in a very, very dire situation. Now, what we see here is on an interesting stock chart. I have this pulled back quite a ways. This is back in February of last year. This is basically a year ago. The stock topped out here at about $37 per share and crashed down pretty violently all the way down to about $9. Obviously, we realize what happened last year. Almost every stock, or most stocks, kind of made this dip dive over the next month or two as the virus kind of came to the United States and the realization of that kind of sunk in. Now, it rebounded spectacularly all the way up to $62 or in change per share. But now we are back here at these highs. And in my opinion, this is acting as some level of support here. You do have buyers that probably stepped in at this point and have been holding the bag for a relatively long time if they didn't sell here. And now here we are. There's two stops on the train on the way down. If we break this level, and this is not this is not hard cement here. I would, akin this to being on a tight wire. And if you fall off this one, you're probably coming down to about $33, $34 per share. You fall off that, you get a much harder level of support, I think, down here at $26. Personally, let's just assume maybe you have some shares of space already and you're wondering if you should add because it's had this great run up and it's pulled back. I'll tell you what, I'll let you decide what you want to do. Me personally, this is a speculative stock, okay? They have no money, they have money, but they don't have any revenue. They're not generating any profits. I don't think that's on the horizon anytime soon to generate any significant amount of profits. They're going to be diluting you significantly. That would make this a very, very speculative position. You could pool this with other speculative stocks, maybe penny stocks, maybe even Bitcoin if you want to throw that, or Dogecoin or something like that. That's where I would put this at. Probably more Dogecoin than Bitcoin at this point. So that's how I would fundamentally kind of look at this. And if you have room inside that portfolio, well, then I think you could add, personally, I would wait to add down here at 26. Look, the equity markets have been selling off. A stock like this hasn't caught a bid in several weeks. Wouldn't necessarily think it's going to turn around anytime soon. So you have some room here between $26 and $34 per share is probably where I'd first want to step in here, but I would allocate proportionally to a speculative investment. Okay, I'd make sure I'd have full allocations into all the money-making stocks, all the blue chip stocks before I allocated more funds into a speculative name like this, which tends to go up and down faster than their rockets seem to be going based on the press release and the news of the day in Virgin Galactic. So hopefully you guys enjoyed this one. Don't always cover these speculative companies, but they are kind of fun to take a look at. And at a $10 billion valuation, if this one can get some footing and ARK-Invest does launch a space ETF, well, guess what? This one's probably got more upside in it heading into the year. So hopefully you guys enjoyed this one. We'll be back again soon. Good luck with your investments.